Hey, thanks for tuning in. In this video, we're going to discuss how to identify relative strength and how to look at different ETFs and identify, which stocks are performing best. We want to do this as objectively as we can so that the next technician that looks at the same data comes to a similar conclusion. We don't want to impose our bias on the charts. So the best way to do that, in my opinion, is to look at like the compare function, which is offered by Stock Charts for free. You can just go to stockcharts.com, type in the two tickers that you want to compare, separate them by a colon, and I like to change this to a solid line chart instead of a candlestick chart whenever I compare two assets, because we're looking for relative strength. In this particular instance, you can see that XLF is outperforming IWM. And that's been going on since November. And if you look at the weekly chart, this is a trend that's been going on since the beginning of the year. So, all of 2021, it really didn't make a lot of sense to play IWM. It made a lot more sense to play XLF. They are correlated and have similar assets. So the best way to look at what's in a particular ETF is to look at the top 10 holdings. A lot of these are equal weighted ETFs. So here we've got XLF, and the top 10 holdings are Berkshire Hathaway, JP Morgan, Bank of America, etc. And you can see the percentage of assets within the ETF. So once you identified the tickers, you want to then go plot them out. And I'm using TradingView for this. I just type in all the names under the compare. So like if we wanted to add like a Bank of America, boom, back is added, up 1.81% on the year. I then changed this from candlestick to line. I started at the beginning of the year. And now you have a way of tracking all of the tickers that were the output of my market scan to start the year. So I try to let the market decide what tickers we're looking at. If this month it's banks and energy names, then those are the names that we're looking at. And I try to avoid the names that are at the bottom of this list, the ones that are underperforming dramatically, and focus on the names that are at the top that are outperforming. And yes, at times you do have names that come down here, like Melly, who started the year down 15% and is now pretty much flat. So there is some mean reversion that will take place, but what I'm more interested in is Melly going to get over this zero line and start being a gainer on the year, or are these names that come down here just going to revert up to a little bit and then start heading lower again? And same thing with the top. So that's kind of how we rank these and sort these. Like you'll see the Berkshire Hathaways and all these names over here on the right, and you'll see at the end when you do this, and this I know has more than the 10 names that are just in XLF. But when you do this, you get a pretty clear picture of what's leading and what's lagging within the ETF. And this is about as objective as I can get it. So, we can look at things like XLF versus IWM, XLF versus QQQ to see relative strength, XLF versus maybe SPY, and start to see, okay, is XLF really going to outperform moving forward? Is it going to outperform SPY? Is it going to outperform QQQ? What will it outperform, right? It's definitely outperforming IWM. So what's that telling me? Well, it doesn't make any sense to have IWM in my portfolio, right? Now, if you're going to build a diversified portfolio, XLF versus QQQ, it certainly makes sense to have both QQQ and XLF, because historically QQQ has outperformed XLF. Now, maybe this is a trend that's changing, but right now it's still in a series of lower highs and lower lows. So this is kind of, the extent at which I'm doing research here to verify relative strength. But again, it's the function of a pair chart where we're comparing two sectors. It's breaking down what's actually in the ETF and charting it from a relative strength standpoint. And it's identifying the chart patterns. Obviously, if I were to then go look at these names individually, you'd see the ones that are all up here Let's add one more, for example, like JPM. I don't know if you're in here or not. Yeah, JPM's basically flat on the year, and Bank of America is up 2%, right? So if I were to play a bank, why would I play JPM, right? And so we're about 2 weeks in on the year, and these are the names. These same names have been at the top of the list all year. It's all oil. It's all finance names to start 2022. And so as these names rotate out of favor, and we see things like SOXL or TNA or TQQQ start to come back into favor, we will be able to identify that in real time. But until then, I mean, there's no other way to look at it. The relative strength is in oil, and it's in finance, and we've objectively proven that. And when it changes, we'll see it change in real time. I know there's other ways of doing relative strength. This is how I do it. It's very simple. Anyone can do this. I'm using all free software. None of this is paid. You don't need a premium subscription to compare things in stock charts or in TradingView. So that concludes this video. If you like the content, hit the like button, subscribe to the video, and check us out in the next one. Thanks.